Welcome everybody. Thank you for joining us on a Tuesday afternoon. As Renee said, my name is Brian Rehler, TraderShark.com, and there's always a story behind the name. I'm not going to go into detail on that, but what does a shark do? A shark bites really quickly and moves away. So that's what's great about investor inspiration. A lot of the traders are longer term. We're more shorter term scalping trading. So hopefully you'll learn some stuff today you can take with you in trading, whether it's stocks, options, futures, or any type of equities market out there. So anyways, what are we going to do today? We're going to learn how to day trade the S&P E-mini futures. In other words, I only trade 2 hours a day from 9:30 to 11:30. That's unless there's no trades going on in the morning, then maybe I'll jump in the lunchtime trading zone and into the close. But for the most part, we are scalpers in about 2 hours a day. So Investor Inspiration and TraderShark.com want to present 5 keys to market timing. Also, you've got to know, trading futures, options, futures, and virtually any other trading vehicle out there, you can lose all or more of your money. You've got to know that. What are we going to learn today? 5 market timing elements, and time plays a critical role. I would have to say today it did not work. So know that it's real, just like anything else out there. Key support and resistance levels. We're going to talk about that. Trade what you see, not what you believe. So we want to try to avoid trading with emotions as much as possible. Trade what you see based on we're using commonly used indicators. Key lessons to help avoid becoming shark bait. In other words, so we're not taken advantage of by the institutional traders and the big traders on Wall Street. That's me. I've been a trader for over 25 years. Stocks, options, Forex, futures market, treasuries, bonds, all the fun kind of stuff. I ended up narrowing down to the S&P mini futures, and it's like a mutual fund of stocks as opposed to chasing after hundreds and hundreds of stocks trying to find out which one's going to move. I was a mortgage broker for 20 years, kind of forced me into learning about the treasuries and the bonds as to how that was going to affect the interest rate market. Former U.S. Army officer, I was a captain, as a medevac helicopter pilot, Desert Storm, all that fun kind of stuff. And I'm actually a trained professional life coach. A lot of people call themselves coaches, but I was actually trained by one of the best in the industry. I don't think I'm allowed to mention his name here, but if you email me, I will certainly be happy to tell you who that is. I'll tell you that he walks on hot burning coals. How about that? Anyways, I was a coach with them out in San Diego for a short period of time. What else are we going to do today? Create a core group of like-minded traders helping other traders. Apply commonly used indicators to trading futures inexpensively. You don't need to spend thousands of dollars to do this. Help reduce one of the biggest injuries to most traders, and that is over trading. Agree or disagree? We overtrade. We just have that anxiousness. We want to be in a trade. This morning was a great example of patience. Man, we sat there for quite a long period of time before we even took one trade. To slow you down before you click. I do tend to talk a little fast sometimes when the market's moving fast. I'm originally from Western New York. So down here in Orlando, Florida, I have to talk just a little bit slower. I want you to think before you click. That's the objective. Provide a unique training environment in a live trading room for new and experienced traders. You can ask me questions throughout the trading environment, throughout the trading day. I do keep the screens up until 4 o'clock in the afternoon, Eastern time. And then also what we'll do is you can ask questions as long as I'm not in the middle of a trade, and you will know. We talk about it, the entries, the exits, the targets, everything during each trade. So mind sharing. People ask me this all the time. Well, if you're so successful, why do you trade? Why do you teach other people how to trade? Well, I'm an extrovert. I'm always out there going, doing. If I stuck behind computer screens 2 hours a day, I'd go crazy. So I do enjoy talking to people. Also, I believe that success comes from a team approach more than an individual approach. In other words, traders helping traders. I also think contribution back to the community is absolutely critical, just like the prior speaker was talking about. I support the Russell Home for Atypical Children. It's a non-government supported agency. And then Clean the World, which is awesome. They actually accumulate the soaps from different hotels in the area. I am in the entertainment capital of the world in Orlando, and what a great idea. You take the soap and they regenerate it and they give it to those less fortunate. So let's take this step by step. After you place a trade, have you ever felt like this, right? It's absolute. Of course, that's a lot thicker computer than we're used to seeing these days. But you place a trade. Was I in right? Did I get long? Did I go short? Is it against me? This is uncertainty, right? I'm going to lose money. I'm going to make money. How much am I going to make? How much am I going to lose? Uncertainty, right? So we want to establish discipline, consistency. What better place to learn that from a medical officer in Desert Storm who's been, if you've ever gotten shot at in a helicopter, you'll know what stress is, right? Anyways, so remain calm, even if you come in late. Why? We're told approximately 90% of the traders consistently lose money, and it's probably higher than that. So if we're patient, we have a set of rules and discipline. Do you think that they will know when to be in a trade or get out of a trade? For example, if you looked at yesterday's video, hopefully most of you had gotten a copy of that, it shows sideways motion from 11:30 on into the close. That's why I don't trade after 11:30. So it's a great rule, and it's up to you whether you apply those rules. So we want to apply 5 of these rules, market timing not indicators, but market timing rules, prior to actually entering a trade. And it's not that difficult. You just have to use a little bit of common sense, and you have to work at it, right? You're not going to step into a room and say, oh, buy here, sell here. That's ridiculous. I created this room. I want people to learn how to trade on their own. What happens if your moderator just disappears? Doesn't exist anymore, right? You've got to be able to do this on your own, and you don't need to spend thousands of dollars to do it. So time is one of the key areas that I use, and I've got this overlayment that I've had for over 25 plus years that gives me a rough idea where the market cycles occur, and so I use time. And the time chart is available on our forum for those members, right? So floor traders, while there's not so many of them anymore, you know, maybe 20%, but they're not rocket scientists, right? They got computers doing most of their work. They don't want to be. They don't want to be thinking real hard when they're on the floor. I was going to say on the dance floor, right? They don't have a pocket full of indicators. They don't need them. They don't have multiple monitors. They're on the floor. They can't. They watch time, price action, and volume. There should be no surprise there, right? So their computers are using the algorithms, high frequency trades, flash orders, dark pools, and iceberg orders. Amazing. Each one of those items could be a different class in itself. We're not trying to overwhelm you with information. Avoid that, right? But the rules will help keep you out of these choppy areas where you actually become shark bait. So how do we beat them at their own game? Again, time is the most important factor in determining market movement. And by studying past records of individual stocks, you will be able to prove to yourself that history does repeat itself, and that by knowing the past, you can tell the future. Is that true or not? Highs and lows of the prior market tend to be areas that we will penetrate or resist off of, right? That's a history. There's a definite relationship between time and price. So I'm going to show you, and I think this is recording. Yep, it's being recorded. And also there's videos that I have provided as well. These sessions, put them in sequential order, right? Write these down. If not, you'll be able to do it later on the recording. But here we go. Pre-market, 8:30 to 9:30. Very seldom do I trade this time frame. A lot of other traders very successful during that time frame. It's just an area of high volatility. There's only one, right? There's an exception to every rule. There's only one trade that I will take during this, and that's when I use the Fibonacci levels. Okay. Session 2, 9:30 to 11:30. This is when we're trading. This is when we're attempting to make money, right? This is when we're attempting to be profitable, and then we go off and we enjoy the rest of our day. Remember, this is Eastern time. Everything is in Eastern time. The midday zone between 11:30 and 1:15. I call it the lunchtime trading zone, right? Session 2, 1:15 to 3:30. That's an area I would prefer to avoid. I don't want to be trading that time frame, and if you've ever traded it, you will know why. You can learn the hard way, or you can learn the easy way. So the market close from 3:30 to 4 o'clock. Do you think maybe this is an area that I also like to watch? Right? If I haven't already made my profits during the morning session, I want to watch going into that close. And I'll tell you, even for today, watching the S&P futures, we had 2 news reports that came out bullish. I believe we had the housing market index above consensus range. And if I remember correctly, Empire State Manufacturing Index was above consensus range. So we have 2 bullish news reports that have come out, but the market tended to sell off. Watch how this works. One of the news reports, I'm not a big news report trader. I just know I don't want to be in when the news report comes out. But if it comes out bullish, the tendency would be for the market to move toward the news report into the close. What? Say that again. The market tends to move toward the news report into the close if it didn't move that direction in the prior session. So this afternoon, I'm going to be watching for a potential move higher from 3:30 until 4 o'clock. Is that fair? Is that good stuff? Okay. Reversal zones. Well, you know, everybody knows 10 o'clock and 10:30 are reversal zones. 10 o'clock, 10:30 reversal zones. But I've got a range here. Look at this, 9:50 to 10:10. Watch it for a potential reversal. 10:25 to 10:30. This is another reversal zone. Now, what I've witnessed over the last 3 weeks is this second reversal zone has been catching a lot of traders off guard, including us. This reversal is now starting to move gradually. We're going to have a longer period of time to track it. It's starting to move until 10:45, right? A quarter to 11. So we want to be very careful from this 10:30 to 10:45 time frame when we're placing a trade, because if it's not going to reverse, and we have specific rules, they're going to be applied at a reversal, right? It's got to move a certain distance or it's got to break a certain level. That will be the reversal, and then we know what's going to happen. If it doesn't, you're going to see some screenshots here very shortly as to how we can take advantage of those time frames. Number 3, of course, these are military time frames, right? 13:15 to 13:30. That's 1:15 to 1:30 Eastern time in the afternoon. It's a tendency to be a third reversal zone. 3 o'clock to 3:10. Great opportunity to watch this market as it's reversing, maybe hitting a support or resistance level, which we call shark bands. And as it hits one of those levels, this may be an opportunity to take advantage of a reversal before we get into that last one going into the close of 3:25 to 3:30. So far, so good. This is good stuff. Watch these numbers, okay? Watch the time frames. And I would certainly encourage you not to trade it immediately after you hear this stuff. You just kind of watch it, observe it for a week, and go, you know what? That works. Markets tend to trend when? This is a good opportunity to know, when do we want to hold on to a trade a little longer? Well, markets tend to trend from 10:10 to 10:25. What is this 10:10? This is coming off the first reversal zone. What's 10:25? Going into the second reversal zone. So we got about a 15-minute window there that the market would tend to trend. The market would tend to trend. And here's another one. From 10:30 to 11:15. Again, I'm going to have to put my little caveat in here. We're starting to see this second reversal zone at 10:30 gradually move towards the 10:45 mark. So be cautious in here. I would say maybe trending from 10:45 to 11:15. Okay. 14:15 to 1500 trending time frame. Yes or no? This is 2:15 to 3 o'clock. Whoops. Sorry. It looks like I'm going to back up one slide. 3 o'clock to 3:25, another trending time frame. I like this because it comes off the 3 o'clock potential reversal for a trend into where your professional trader is going to set up for the following day. That's 3:30 to 4 o'clock into the close. No trade zones. Wait a minute, 9:30 the market opens. What do you mean you're not trading from 9:30 to 9:45? What I'm saying is allow the market to take advantage of those people less that don't have the rules, don't have the knowledge in front of them. So that first 15 minutes is a shakeout period, right? There's only one trade that I'll do here. It's called the pro range reversal. And that's one we'll take advantage of the first 15 minutes all the way until 10:30 in the morning. Aside from that, I'd prefer not to trade the opening 15 minutes. You can make a lot of money if you're trading it, but just I'm trying to educate a lot of conservative traders as well as longer term professional traders. This is an area I just kind of avoid. If we do, we're going to be in and out really fast. 11:30 to 1:15 is a lunchtime trading zone. I will only trade this zone if I have not made any money from 9:30 to 11:15, from 9:30 to 11:30. Then I'll be considering taking a trade in the lunchtime trading zone, because that's when they're maybe consolidating prior to an initial move. 3:50 to 4:15, another area of that last 10 minutes before 4 o'clock. I'm not interested. They're trading professional traders, and they can move it very quickly against you. Not interested. Specialty zones, 1:30 to 2 o'clock tends to rise. 2 o'clock, we don't want to be in any long positions. Watch for potential reversals in through there and pullbacks. 3 o'clock until 3:30 to 3:40. That's a time frame that we want to watch for the market to move towards the news reports. 3:45, bigger money comes into the market as they position for the next day. That's it. Pretty cool. Jesse Livermore. Throughout all my years of investing, I've found that the big money was never made in the buying or the selling. It's made in the sitting, right? The waiting. That's what I'm talking about. Patience, discipline, consistency. 5 keys: time, summary. Trader Sharks consider time a critical element in determining when to enter and exit trades. Market condition. Easy stuff. You already know this. The market conditions are what? 4 possible answers. The market trends up, the market trends down, runs sideways, not trending, consolidating. But then there's the fourth one called the other. We know this. Higher highs, higher lows, trending up. We know this. Lower highs, lower lows, trending down. Consolidation accumulation areas. If we don't know where the highs and lows of this area are, the computer's going to generate it for us. This is an opening 15-minute range. We use this for an area that kind of tells us it's going to be choppy in here. Ooh, these are called shark bands. The pretty colors, right? We're using these. We know I don't want to be trading right up into the shark. Oh shoot, sorry about that. we don't want to trade into the shark band here. We want this pullback to take us up to the shark band. And then as we have a reversal, work our way to the next one, that's what we're doing. We're trading from shark band to shark band. If price action starts to get consolidated and crushed up in the middle of these shark bands, we wait until we get through it. More of the waiting, more of the discipline, more of the confidence. We break up out of it. Black area is called open water. You'll notice a lot of the terms we use what are called oceanic themed. So TraderShark, open water, wave trades, pro range reversals, tidal waves, shark attacks. You're going to see this here very shortly. The market can stay irrational longer than you can stay solvent. Think about that for a second. The market can be running sideways and we get anxious. And then we want to get into a trade. Staying solvent simply means I got to have enough money to trade when a good trade comes up. Be patient. Sit on your hands. The market can stay irrational longer than you can stay solvent. John Maynard Keynes. Momentum. I think this is a great idea. A momentum, you can turn left, turn right, and go straight, right? Directional. A directional indicator. How about the ADX? Average Directional Index. Accelerator. Momentum. We accelerate. This indicator is so supportive of the trades is that if that accelerator is inclining or moving up, the average directional index is moving higher. You use, that's the directional indicator, you use your momentum indicator to accelerate, okay? Now, it sounds easy in what you're seeing here in theory. Now you apply actual indicators to it. A steering wheel and an accelerator. The directional indicator and momentum, that's it. This is a screen, very similar to what you'll see in the Shark Den. This is a higher time frame chart. I don't know if you can actually see my cursor when I move it. This is a higher time frame chart. You'll notice that a higher time frame chart on the left side, a lower time frame chart on the right side. So what happens is, as our higher time frame chart sets up, we're not placing our trade there. We're going to wait for a pullback, a minor pullback for our signal chart or the second chart, lower time frame chart, to angle in the same direction as the anchor chart. Does that make sense? So whether you're trading longer time frames, maybe weekly and daily charts, or a daily chart and a 4-hour chart, or a 4-hour chart and a 1-hour chart, you see what I'm doing? I'm using comparisons of a higher time frame chart with a lower time frame chart. We trade lower time frame tick charts. We don't use time charts on this. I'm not going to tell you what the settings are in the webinar. Come join us for a free. We got a free trial going on tomorrow, and check it out. So patterns. We know the patterns, but it's great to recognize those during the trading day. You get a pattern that lines up with a wave trade, you're golden, right? Divergent tops, double top. Divergent bottoms, double bottom. Wedges, triangles. We've seen these things before, right? Head and shoulders. If you don't know what they are, you can Google them. They're very standard. These are patterns that have been around for ages. So, the other pattern that we were talking about is a megaphone pattern. Ooh, search and destroy algorithm. What does that look like? Inverted wedge, broadening top. These are the same pattern, different names. This is what it looks like. Higher highs, lower lows. Higher highs, lower lows. Does that happen? You bet it does. Why does it? They're searching for the stops before they take it in an intended direction. A lot of people, you don't hear them talk about this, right? They just say, oh, it's choppy. Oh, we can't get in. Oh, the volatility's increased. It's a wedge. It's an inverted wedge. It's a search and destroy algorithm. It's called a megaphone pattern, okay? Anybody want to guess why it's called a megaphone pattern? Okay. That's not my son. That was just a really cute picture that I like to throw in there. Shark Den patterns. We have different names. Get used to them. They're not that difficult, right? Wave trades. Higher time frame, lower time frame. You're going in the direction of the wave. Dive trades, we'll talk about that later. That's something you'll see in the shark den. Hook patterns, very similar to a flag pattern, but a hook pattern's got a unique feature to it. Attack zones, we want to know where those are. Shark attack setups, tidal waves. I think, was it yesterday or the day before? The day before was a tidal wave day. Okay, ask me that question in the shark den tomorrow. The shark den is our live trading room. Support and resistance levels. So far, is this difficult? Pretty basic. Time, watch the clock. Market condition, trending up, trending down. Momentum, do we have an acceleration or not? Are we running sideways? Patterns, commonly seen. You got to put them all together. And it's remarkable how they'll gradually work their way together for you to be able to place trades and make it successful. Support and resistance. Well, that's a no-brainer. We know we need support and resistance because that's where we're taking the price action to, or that's where we're bouncing off of. You're going to see that here shortly as well. Master the basics, you will master the art. So while those may sound like basic items, master them. Understand how you're going to apply them during the trading day, and this will help you be successful. So what are support and resistance levels? Pivot levels, we've heard them, but they don't always work. Fibonacci levels, we've heard them, but they don't always work. Key number levels, ooh. Consolidating numbers, more numbers in the same area. Prior highs and prior lows. These are all numbers that are absolutely critical for us to understand, right? But you can't understand all of them at the same time. So if we put them all together, do you think maybe we could come up with something that'd be a little more unique? Maybe something called a shark band? A shark band is those really cool green, blue, and red lines that I calculate manually every single day. They're going to change every day. When they come as support and resistance, you're going to see how we can use those. So how are we doing on time? I think we got a few more minutes here. We'll get some questions and answers, but I want to show you some screenshots. I want you to see what you're going to see tomorrow when you come join us for the free trial. How the free trial is only one day. That's all you're going to need to come in and say, hey, I kind of like it. Hey, it's not for me. And how the shark den works. Is this the way we feel sometimes? We're by ourselves, we have our computer, and we're surrounded by these institutional traders or professional traders that are taking our money. So let's see if we can beat them at their own game. Crash course, what you'll see in your free trial. You're going to see the movement of price action. You're going to see shark bands. Ooh, pretty colors again. Look, green. Does it make sense that green may be support levels? Potential buying opportunities. Blue, central area. Central area, maybe like a control area. Red, resistance levels. You think this is a good area to maybe look for a setup short? Totally. Ooh, what are the yellow lines? Those are the opening range. Do you think that if price action works its way back up to opening price, that may be an area of chop? What I tend to do is at least once a day, I will announce the 5 areas of chop to be aware of. When the indicators or price action gets within those choppy areas, those would be areas you want to be concerned about trying to take a long or a short position. So you sit on your hands and you wait for an opportune time to set up. Today was a great, I wish I could show you today's screens. I didn't have a chance to make a copy of it, but this morning it was a challenge. We could not get an anchor chart to line up. We could not get a signal chart to line up. And those are going to happen every once in a while, especially as we're coming off of the summer trading hours. So be patient. When the right setup, when you see the right setup in the anchor chart and the signal chart, it's really clear. Okay. Do we try to take trades outside of that area? We do, and I'm going to tell you. I tell you exactly when and why. I tell you if I made a mistake. If you look at the video from last night, you're welcome to go to our website and check it out. You'll say, I took a loss. The first trade I took was -4 ticks, and I said it was an error. Well, everybody can call it an error. No, it was an error because we evaluated it right there on the screen at that time. The market gapped up by over 8 points, and I went short. Big mistake. I did it. I paid for it. Everybody saw it live, but the next 6 or 7 trades beyond that were all profitable. Does that happen the same way all the time? No, of course not. Do I lose? Yes, of course I do. Do I take a full stop out? Once in a while, not so often. But when you do, you'll hear me take a loss, but you'll see minimal expression change in my voice or tonality because it's part of probabilities and statistics. It's going to happen. Accept it. Drive on to the next trade. If you carry it with you, you won't be able to be successful in your next trade. You're going to get into what's called revenge trading. You're going to try to trade back to get that money back into your account. I just caution you to let it go. Get it behind you. Look forward as to how you're going to improve for the rest of the day. So these shark bands with price action tend to work really, really well. I mean, almost religious, right? What is this? Some form of a moving average? You know, they're not really effective, but they do kind of help give you a quick visual representation as opposed to kind of looking for straight lines and support and resistance levels. Kind of gives you an idea. Now you get into what are called attack zones. These are nice. A breakout, pull back and go. Breakout, pull back and go. Again, I suggest you go back and look at the last 2 days worth of videos and you'll see how those work very well. Repetition is the mother of skill. Tony Robbins, one of the world's greatest life coaches. 5 keys, review, here we go. Time, trending or consolidating. So far, so good. Momentum. Well, there's all kinds of momentum indicators. Right. Come join us in the Shark Den. I'll show you which one we use. Patterns. Apply these, put these together. If you're sitting there doing nothing or just waiting to buy or sell, you're not doing enough. Same thing inside a helicopter when you're flying. If you're not doing something, you're doing something wrong. It's 2 hours of concentration on the market and on the screen. Look at the patterns, look at the momentum, trending, time frames, things like that, okay? Support and resistance. Those are already going to be on your screens. How do we put it all together? This is an anchor chart coming off of a shark band. The anchor chart's setting up long. I kind of like it. Look at the time frame over here, right? The initial setup is right at about 1 o'clock, right? Initial setup. Then I look over to my trigger chart or signal chart. The signal chart's giving us where we're entering and exiting. There's a trend line cross right there. An opportunity to enter long. Now, do we hold this and run it all the way up? Not always. It depends on whether you're in a trending time frame or very specific target levels. Where you're going for your target levels, I'm going to show you how to get your target levels tomorrow. Let's see some screenshots. Great. 10 a.m. continuation. What happened here at 10 o'clock? I'm sorry, right here, 10 o'clock. This did not meet the pullback rule, and as a result, we knew it was going to be looking long. Had an opportunity here. This is after 10 o'clock. Opportunity long here. Opportunity long here. There was really no opportunity to trade it. No opportunity to trade it right there. Trend line cross. Pretty cool. This is how you take advantage of the 10 o'clock reversal. A lot of people are getting caught short. The average trader is told reversal at 10 o'clock, reversal at 10:30. I'm going to show you how to hone in as to take advantage of that. 10:30 continuation. Check this out. Here's 10:30. Wow, 10:30 looking to reverse off of a shark band. Hey, because we see these shark bands, people don't know, they don't call them that on their own screens, but these are some of the institutional levels that they'll use. And if they're not reversing at 10:30, likelihood's continuation higher. This is where we're looking to get long. So a lot of traders are going, you're going long, we're going long. And then you take advantage of that up through the shark band on into profitable trade. Shark bands, we talked about that. Okay, so do I just randomly take these numbers and put them out there? No, these are live trades. So when we get a trend line cross, we get a green dot. Here's what you'll hear me say in the room. Green dot, green candle close. Green dot, green candle close. Green dot, oh, no green dot. It's okay, don't need it. But what happens here? This is your third trade. Be very careful, right? Action, reaction, continuation. This continuation may happen twice. The third is more like the fifth wave, and it will tend to roll over. So be very careful on your third trade in that same trend direction. 4 ticks. Why only 4 ticks? Hey, if I got 2 red candles against me, time to get out. One of the rules, right? Whoa, this ran against me and then proceeded to continue in the same direction. It'll happen. Be aware of it. Accept it. Hook pattern. Ooh, there's your beautiful hook pattern. Looks kind of like a flag pattern. But in this case, the rule, there's a specific rule. It's a little bit different. Okay. Over here, same thing. Look at this hook pattern. Nice continuation. Nice continuation. Nice continuation. They're working their way through for continuation. 4, 2, 11 ticks. Isn't that interesting? That combination, 4 and 2. Anchor, signal. Anchor chart, signal chart. Higher time frame chart, lower time frame chart. If you're a little more aggressive trader and you hang in the shark den for a little while, you may be able to knock out this kind of trade. If not, go to conservative mode, wait for a minor pullback. So you don't get this profitable trade here, but you get it on the pullback to go here. Why? Because you're going to get generally green dots, green candle, go. Okay. Try to make it as simple as possible. complicated market, right? Anything else? What is this? How did this screen get in here? Now, I think what this had to do is this is more or less looking for some support off of a shark band, resistance off of a shark band, and just watch how to apply those, okay? So if you have any questions, please feel free to go to TraderShark.com. This is in the wrong location. This is saying go to your home tab. Don't go to the home tab. Go to the sign up tab. And under the sign up tab, it has the, for example, today it has the webinar presentation for today. It has the webinar specials directly underneath it. And come join us for the free trial tomorrow. I think we're pretty close to capacity at this point, but if it gets too high, I'll just go ahead and I'll expand the room. Thank you for your time. Thank you to Investor Inspiration. I appreciate the opportunity to present in front of everyone. I don't know, do we have a question and answer opportunity there, Renee?
Yes, if you open up the questions box in the dashboard, if anyone has questions, you can type them in there for Brian. You'll be able to see them.
Questions, got it. How are we doing time-wise?
You're good on time. You have
Excellent.
about 5-10 minutes left.
Excellent. Any questions that I can help for traders interested? Going good? It's good stuff out there. Okay, everybody, I appreciate that. Please feel free to email me. My email address is right there, brian@tradershark.com. I'd be happy to give you, if you want to talk on Skype for a brief moment. Also have an awesome coaching program to help you trade whatever it is you trade out there. You don't necessarily have to trade my method to take advantage of the coaching program. Thank you, and good luck to your decision on what you're going to be trading out there today. Have a great day, everybody.
Brian, I did just get word from our next presenter that he is still getting things all set up and will be about 10 minutes. So if you have any more to add, or if anyone has questions for Brian, it looks like I do see something from Michael on there for you.
On the question, it looks like it's got a question mark, but I can't really read the question. Let's see. Oh, let me see if I can expand this down a little bit. I can't really see the questions in there. Oh, okay, pricing. I have the trading manuals that I highly recommend are like, I think $189, something like that. And I'm getting a 25% discount for the webinar special today through Investor Inspiration. And also, I've got generally the Shark Den is like $200 a month. I've also got a 25% discount for those people that take advantage through the Investor Inspiration website here. And I'm not a big seller of items. I don't make all my money trying to sell the website or trading materials. I'm making my money trading for a living. So I also have indicators for TradeStation. That money goes to the guy who created the indicators for me. I guided him and he created it, and so the money will go to them, as well as NinjaTrader. And the coaching program, I think, is probably one of the best out there, and mostly because of if you have specific questions, I'd be happy to have like a 15-minute session on Skype, and you'll understand why. I'm a firm believer in coaching and having somebody. It's not necessarily having somebody hold your hand. It's having somebody hold you accountable. And make sure you go to my website. Go to where it says Learning Center, right here. Go to Learning Center. Go down to the videos, and there's a great interview that somebody had given me, and I talked about an accountability partner. But hey, you know what? If all these presenters are great and everybody's got something unique to share, before you use real money, get in there and trade it and test it first. Well, how am I held accountable? I don't want to be doing paper trading. I don't want to be doing simulating. I've got an idea for you. What you do is your significant other, your spouse, your girlfriend, your boyfriend, whatever you've got out there, you do this. If you do not follow the rules on a trade, whether you make money or you lose money, you have got to pay your significant other, I don't know, we want to make it painful. A $10 bill, a $20 bill, a $50 bill. Some people have had to push to $100 before they felt the pain, right? And what that means is they're your instant accountability partner, because they're going to say, thank you very much for the money. Now, why did you do it, right? They want you to be successful just like anybody else. Instant accountability partners. I can't really see the questions here. I can only see like the last couple words. I don't know if maybe you can help me out there, Renee. It says something on manuals. Let's see. Maybe after bigger, then maybe offer bigger discounts on the manuals. Actually, I think the manuals offer bigger. Funny. No, I think, you know, I watched a lot of trading rooms when I was coming up. I've spent probably in excess of $70,000 to $80,000 learning trading. And so you take a little bit from one room, you take a little bit from another room, you kind of learn what would be the best resource for you. And each individual trades differently. In their mind, they trade differently. Even in the shark den where we're trading, different traders are going to trade differently. They may not trade exactly as I trade, and they don't have to. It's whatever speaks to you, right? There's no one size fits all. It just doesn't exist out there. So, you know, the manuals just basically cover the cost. I think the manuals are very well written. I've had nothing but very strong responses on that. Go ahead and read the testimonials. I think that's under the About Us. Those are all real testimonials, real traders, all documented. I have the emails and the letters that are secured if anybody has any questions. So check out the testimonials. Come join us. I like to think that we're not the most expensive. It's not a home run get rich quick scheme, right? The idea is you're gonna gradually make profits as you move forward. You're gonna take some losses, and you certainly do not start out anything with real money. And then what I think was it Larry Williams or the one who said, you know what, put together 20, 30, or 40 trades and figure out your probabilities of success. Then and only then will you establish a type of discipline where you can take that and apply it with what's called unconscious competence. That's another class in itself. Conscious competence, unconscious competence. Okay? I don't know if I answered your question or not. When you get into a car, you get in with your car keys, you put it in, you turn it on. That's called unconscious competence. After a couple of years, you've learned how to drive it, right? When you first start, that's called conscious competence. You have to actually think of where the keys are before you put them in. Not these days. Now you just push a button. But the idea is you have to think about it, and you're aware of everything before you do it. When you do it unconsciously, that's called unconscious competence.